Hey Dividend Surge crew. Quick question. Would you trust your passive income dreams to a small utility stock that almost no one talks about, but has paid a steady dividend for over 65 years, through wars, inflation, and every recession you can remember? Today, I'm diving deep into Northwest Natural, NWN. Could this be a hidden gem for dividend investors? Or is it too slow and too small to deserve a spot in your portfolio? Let's find out. If this is your first time here, welcome to Dividend Surge. We ride America's hottest waves of dividend opportunities, break down Wall Street's best-kept secrets, and help you build the kind of passive income portfolio that can handle any market storm. If you love these deep dives into off-the-radar stocks, punch that like button and subscribe so you never miss an episode. Let's set the stage. Northwest Natural, ticker NWN, is an old-school gas utility serving 2.2 million people across Oregon and Southwest Washington. They provide natural gas to about 800,000 homes and businesses, and with roots tracing all the way back to 1859, NWN is one of the oldest utilities in America. But the real story? The company is small. With a market cap just north of $1.3 billion, it flies way under Wall Street's radar compared to giants like NextEra, Duke, or Dominion. NWN is what dividend fans call a dividend achiever. Since 1956, it's paid out a dividend every single year. Let's hammer this home. 2023 dividend, $1.95 per share. 2025 estimate, $2.02 per share based on announced raises. Never paused, never cut. Even during the 2008 financial crash. That's 69 consecutive years, as of 2025, of payout growth or stability. To put this in perspective, the S&P 500 average yield is only 1.4% right now. NWN is serving up around 4.5%, over 3 times the index average. And it's consistent. Annual raises may be measured, usually 1 to 3% per year, but they're unbroken. Let's talk data. Market cap, $1.3 billion. 2025 revenue, $960 million, steady with minor annual growth. EPS, TTM about $2.16 per share, 2024 trailing. PE ratio, hovers between 15 and 18, typical for a defensive utility. Dividend yield, 4.3% to 4.6% depending on entry price. Payout ratio, usually 80 to 90% of earnings, so almost all profit goes to investors. Balance sheet, $2.5 billion in total assets versus $1.7 billion in total liabilities. For comparison, NextEra Energy, NE, the biggest utility in the U.S., offers a yield of just 2.7% and trades at a PE of 23 plus. NWN's yield is meaningfully higher, and you get classic small-cap resilience. So why is gas such a defensively powerful business? Let's check the box. Mission critical. In Oregon and SW Washington, 49% of homes use natural gas for heating. Cold winters mean people won't skip paying their NWN bill. Long-term contracts. Over 90% of sales are under multi-year, state-regulated agreements. No wild swings like you see in tech or retail. 2024 default rate. Only 0.5% of customers, one of the lowest for any utility in the Northwest. Even during 2020's pandemic and the inflation spikes of 2022 to 23, NWN's revenues barely dipped. Let's list them out for all you dividend fans. Dividend champion, 65 plus years of consecutive payments and raises. Still growing. 8 recent utility acquisitions across Oregon since 2018, each bringing in a few thousand new customers. Regulation shields. Oregon is investor-friendly. The state reviews NWN's rates every 3 years, and they get to pass rising costs straight to customers. Green Transition Plan. The company launched its first 2 renewable natural gas, RNG, pilot projects in 2023, with expectations to reach 8% of total supply from renewables by 2030. Stability. Even after the 2020 COVID crash, NWN stock lost only 14%. The S&P tanked 33%. Surge spark analogy. the family tree that keeps giving. Here's the fun part. Think of NWN like that apple tree your grandparents planted in the backyard. It's not flashy, but every single September, there are apples. Rain, drought, windstorm. Even if you forget to water it, it just keeps producing. NWN isn't about wild price swings. It's slow, reliable, and its fruit is a solid dividend check that arrives like clockwork, year after year. Let's get practical. Suppose you put $5,000 into NWN stock 5 years ago, mid-2020. Median price in June 2020, $58 per share. Share count, 86 shares. Cumulative dividends paid, 2020 to 2024, $8.95 per share equals $769.70, untaxed. 2025 yield on cost, now 5.1% per year on your original investment. Value today, if the stock held steady at $60, total value equals $5,160, plus nearly $800 in cash. Annual income, now $172 per year. That pays for Netflix and Starbucks. Bottom line, your boring Northwest natural position quietly beat bonds, with none of the stress of high volatility tech or meme stocks. Let's talk potential growth drivers. Defensive play. When the stock market freaks out, investors rush into boring utilities. NWN's price tends to rise during volatility. Example, in Q1 2023, when the S&P 500 dropped 7%, NWN rose 2.2%. Green energy upside. Launched first renewable natural gas site in 2023. Signed deals to blend hydrogen into existing gas pipelines by 2027. Regulators in Oregon pledge $60 million in potential funding for green utility pilots over 3 years. If these projects take off, NWN could appeal to ESG, environmental, social, governance, funds, bringing new buying pressure. Acquisition magnet. Northwest Natural is small enough, $1.3 billion, that a bigger utility could buy it for a 25 to 30% premium without breaking a sweat. In fact, Avista Corp, AVA, a comparable player, was bought out for a 35% premium back in 2017. It's on the table. But isn't all smooth sailing, surge crew? Here's the other side. Slow growth. Top-line revenue typically grows just 1 to 3% per year, a snail compared to hot tech stocks. Heavy debt. NWN has about $1.3 billion in long-term debt, equal to its entire market cap. If the Fed jacks up rates again, interest payments could eat into profits. Rate risk. Oregon is utility-friendly today, but a big regulatory shift or climate-driven mandate could cap earnings or force premature changes to the grid. Low trading volume. Around 175,000 shares trade per day. So, selling a big position can move the market, and prices might jump around on news. It's our channel's special surge alert. Let's break it down for dividend chasers and portfolio builders. The pros. Decades of dividend reliability. Recession-resilient customers. Most won't ever disconnect their gas. Quiet green innovation equals niche ESG appeal, future upside. The cons. Modest share appreciation, up 24% over 10 years, versus 132% for the S&P 500. Lower liquidity, higher sensitivity to news shocks than big utilities. Not a growth machine for swing traders. Who's it for? If you're a patient, income-focused investor who values sleep-at-night stability, NWN is a powerful anchor. If you're looking for fireworks in your brokerage app, this one might be too calm. Who should consider NWN? Retirees. Great for those wanting predictable monthly income. Some Oregon retirees have held NWN for 30 years and rely on the quarterly checks as a bill payer. Busy professionals. Don't want to manage stocks daily? NWN is the set-it-and-forget-it play. Young investors. Pair NWN with faster growth REITs or ETFs. They give you a base layer of stability while you chase bigger upside with the rest of your portfolio. Pro tip. Financial advisors often suggest core and satellite strategy. NWN is perfect for the core defensive part. What's your take? Now I want your feedback. Have you ever owned NWN or even heard of it before this video? Do reliable small cap utilities belong in every portfolio, or are they just too boring for your style? Drop your thoughts in the comments. Would you put your money in a boring but reliable stock like NWN? Have you found other small cap dividend stars? Let's crowdsource the best income gems together. And remember, this video is not an investment advice. I break down the data, tell the stories, and share the analysis to help you dive deeper. Always do your own research, okay? If you enjoyed this deeper look at Northwest Natural, don't forget to like, comment, and subscribe. Share this with a friend who always thinks dividends have to be boring. Because as we've seen, sometimes the quiet stocks are the ones that deliver for decades. Stay tuned for more small cap spotlights and powerful dividend strategies. Ride the surge. See you in the next one.